Hello and welcome to Quantbeats. I'm Dan Hubscher, Managing Director and founder of Changing Market Strategies and your resource for all things quant. My co-host is current Quantpedia CEO and Head of Research and former 300 million euro quant portfolio manager, Rado Van Vodko. Rado, please say hello.
Hello, everybody.
Click that Q logo on your screen to hear our backgrounds in episode 1 or check out the Quantbeats website. Now, we welcome our guest from Increase Alpha, Sid Ghatak. Please just give us a hello, Sid.
Hello, everyone.
Thanks. So before we learn how Sid went from government technology strategist to quant fund manager and tech firm leader, as a registered representative, I need to show you the disclosures on the screen now. And at the end of the episode, we'll be giving you ways to contact me if you have questions for any of us about anything you heard here. Okay, let's dip our toes into quantitative finance to help investors, quants, and anyone just curious to gain new insights into quant strategies and market dynamics and glimpse the future of algorithmic trading. So Sid, can you please give us the 1-minute version of who you are, what you do, and any disclosures we need to know about? And then Rado will take the discussion deeper into your background.
Absolutely. Thanks so much. And appreciate making time for me, inviting me onto your podcast today. So I'm Sid Ghatak. I'm founder and chief executive officer of Increase Alpha. I'm also founder and chief executive officer of Pivotal Edge Capital, which is a hedge fund. From a disclosure perspective, everything I speak about today is regarding Increase Alpha, and none of the comments I make today are regarding Pivotal Edge Capital. I also did work for the federal government. All the statements I make today are on behalf of my private enterprises and in no way, shape, or form reflect the opinions of the federal government or the work that I did while I was at the federal government. And finally, the last disclosure is I also serve as the chief technical advisor for the National Artificial Intelligence Association. I may from time to time put that hat on during this conversation as appropriate. You know what I do. But the primary points that I'll raise today are regarding our work at Increase Alpha.
Excellent. Okay, thank you very much, Sid. That was clear. Rado, I'll hand over to you. Please take it away.
So thank you, Sid. Thank you for joining us. I like your intro, and I'm especially interested to learn more about your history. So how did you get from working for government into the finance, into the quant world, et cetera, et cetera? Because, I mean, it's an unusual step. What is your history? I mean, this is interesting.
Yeah, I look at my history as a very unusual history in general because I don't have any real hedge fund experience, meaning that I did not work for a fund or anything like that. I spent the bulk of actually almost the entire part of my career working in technology. I started BA in economics from the University of Michigan. I moved to Chicago, started my career as a Series 7 and 63 stockbroker for Prudential Securities and made 400 phone calls a day when I thought I was actually going to be analyzing stock reports every day. That was the hope that I was going to be doing, but I only got to do that at night. And for 12 hours a day, I made phone calls. And after a year, decided maybe this wasn't what I wanted to do with my life. I went to work for Bank of Montreal, and then I also was starting my graduate studies at University of Chicago at night in finance and strategy, and spent a number of years really immersed in corporate debt and really understanding corporate filings, understanding debt covenants, and calculating loan covenants and interest rates and all of those just really interesting things. But the one really interesting part of my job was I was the human data integrator between 13 mainframe systems. And what that meant was we had 13 mainframe systems that really ran the back office of the bank. And every month all those systems had to be integrated, tied, reconciled, journal entries prepared, exceptionally manual process that I went through. And we had a whole team that did that. And I really didn't enjoy that job whatsoever, but it had to be done so that I could do the other part. So I was set about automating that whole piece and got the manuals from the mainframes, understood how to extract data, how to write applications and programs to move data back and forth. And within a couple of months, I was able to take what took a whole month down to about two or 3 days of work and was fully automated. That was my first glimpse into the power of technology and the importance of data and the importance of very, very clean data. Really cutting my teeth at early part of my career gave me a taste for that kind of work. And then I quickly shifted from banking into technology. So I started technology consulting in the late 90s, spent most of my career afterwards building budgeting, planning, and forecasting systems for Dow 30 and Fortune 500 companies, including JP Morgan Chase, Merck Pharmaceuticals, Northrop Grumman, British Aerospace. The data side of the business really fascinated me. So I spent a lot of time really honing my expertise in data warehousing, business intelligence systems, data delivery systems, and then kept moving up the food chain through advanced analytics. And then when artificial intelligence started to become a new thing to work on, I started working on that as well. So all of my technology is purely self-taught. So I don't think I've taken a computer class since high school. I've really taught everything else. Everything I know, I've learned it by getting the manual, getting a data set, breaking some things, fixing it, and then seeing how they work. Along the way, I was a professor at Villanova University and authored and taught their master's program in advanced analytics and business intelligence. And shortly thereafter, got an invitation from the White House to work with the General Services Administration within their Technology Transformation Services Group. They had these teams called Centers of Excellence. I was the director of the Data and Analytics Center of Excellence and also worked with the Artificial Intelligence Center of Excellence. In that role, I authored the AI maturity model for the federal government, which recommended how artificial intelligence should be deployed at the public sector. That framework is still out there and still in use today. I also contributed to several executive orders that were deployed by the last two administrations, the ethical and safe use of artificial intelligence. My last role within the federal space was the chief AI architect for the Federal Energy Regulatory Commission. So that was my professional work. Along the way, I thought it'd be an interesting technology experiment to see if I could predict stock prices. Something, just a very simple activity. So I say that with tongue in cheek, with heavy sarcasm, because obviously that's what we all do. But I take a crack at that. So what started as a research project, out of my work in Villanova, really started trying to get to the bottom of what are the various methods that people are using now. Where do quantitative methods work? Where do they fail? Why do they work sometimes? And why do they not work in other cases? What's really the missing link? Started experimenting back in 2017 with various pieces. Finally came up with what I thought was a really workable solution, put that in production in 2021. And that has formed the basis of our product today. So I can get into that at any point, but that's sort of the whole background of my bizarre evolution from broker to semi-quant type of person.
I like your background, especially that brokerage part, because I was doing something similar. I was just not selling the stocks, I was selling the hot water. I mean, you have those barrels of the water that are in an office. I tried to do this for, I don't know, maybe 2 or 3 days, and then I realized that it's not for me, and the data analysis is better than, just trying to make the calls. So
yeah, I mean, you were smarter than I am. Like, I wish I left after 2 or 3 days, but I think I set up a lot of interviews and didn't realize it at the time, but I actually interviewed with that firm in Wolf of Wall Street, and I didn't realize it was really quite funny when I went to the interview. It was exactly like in the movie. It was a bunch of guys exactly like that, very, very aggressive, not a lot of shiny suits. I was in that room and realizing I don't really belong here. These are not my kind of people. But now I go to quant conferences and I'm like, oh, these are my people. Okay, these are the type of people that
Exactly. Okay, so as I understand, you are like safe man, technology professional or data analyst, and you moved into the quant world. And everybody who is in the quant world, we are like cooks. So we are cooking our models somehow. But as every cook, we like to cook our meals differently. So somebody likes to use more meat, somebody likes to use more vegetables, somebody likes to have a lot of the spices, etc., etc. So in our quant world, there are multiple different sources from which we can come up and have a great model. And it can be data, it can be portfolio management, it can be portfolio structuring, etc., etc. So there are different ways how you can come up with a great model. What is, in your opinion, the most important part in a quant process? How to build a good model?
Right. So I think it always comes back to the data. I think the data is always the key piece of it because, and I'm sure a lot of people will take a different approach. It's self-serving in a way. Data is actually where I'm the most comfortable. So the reason I think it's data is because that's also the thing I'm most comfortable working with. I understand the challenges of organizing it, cleansing it, having it in the right structure, why it needs to be normalized, what data should be used, what data should not be used, understand the context of the data with the actual problem you're attempting to solve. So because I'm so familiar with it and know it so intimately and intuitively, and I've been working on the data side of the problem for so long, that's always my first reaction in terms of like, okay, if I'm going to cook something, I'm going to find the coolest data that I can find or the data that nobody else is using, may put it through a very simple, recipe, right? The actual transformation of it may not be that complicated to get the result. But if I use very interesting data, I'm likely will get very interesting results.
Mm-hmm. And what are the data that should not be used? Because this is the part that sounds very interesting to me. So what are the data that we should not use?
Data that should not be used. Okay, so having lived in that space for so long, there's the whole concept of personally identifiable information and data about individuals. I think that really, for me, it's a bright red line in terms of you use data and when you don't use data. You should not be using data about people without their explicit, consent
Okay, understand.
and informed consent, right?
Yeah.
Then it gets into other situations of like, intellectual property. You should not be using data that you don't have the rights to use. If you haven't paid proper fair use for that data, you're getting economic value off of assets that you don't necessarily have the rights to or have not procured the rights to. So just because the data exists on the internet does not necessarily mean that you could just grab it, take it, use it, and do what you'd like with it. The ethical and legal components of that are absolutely critical. And so when I started going down this process, having that mindset, I'm like, you know what, I could go out and find amazing data, integrate all this stuff. It might not be right. So, for example, before I started this, I actually had a small venture where I was assisting federal election campaigns. So, from the federal government, from the Federal Election Commission site, you could literally download every single political donation that's ever been made going back to 1996. So, I spent a month doing that. So, I extracted all of this data. Every donation over $50 is recorded, publicized, and can be extracted. So I took all that. And then there are data brokers that are available that will marry your name and your information with everything else. And there are other data brokers that will give you other things. And there are other data brokers that will give you other things. And pretty soon I can create a whole profile of you without you even realizing that I did it from fairly cheap and public sources. That would be exceptionally valuable, but ethically would be wrong. And so realizing that, and I'm like, okay, that's not a business I want to get into, really be involved with. I had to go a different way. But yeah, so the ethics of data is really the first question anyone should be asking about whether or not they should or should not use it.
I think you are right. I mean, it's really important because even when we start building the models and we are not having the ethical data and we will become successful in the future, this is something that can hound us in the future because it will still be with us even in 5 years or in 10 years.
Absolutely. And I think on that side of it's really interesting is because I don't think, I mean, most people don't have a nefarious mind. I like to think that most people are good. So you're trying to solve a problem. And then let's say you decide to go with alternative data and you're going to use satellite imagery off of parking lots. I think that's a very popular one.
Yeah, it's very popular. Yeah,
Very
exactly.
popular. Okay, so I've got satellite imagery off of parking lots, but because it's high-res satellite imagery, now I actually have the license plates of the cars themselves, which can then be extracted. And let's say I just use that along with card swipes, at buildings, as well as foot traffic, as well as video feed from inside of malls to understand where people are going. Well, now I have a lot of information inadvertently about people that in the wrong hands could be used incorrectly. So that's something to really think about is have you accidentally created a profile of a person just by buying 5 or 6 different data sets from different people?
You're right. And I mean, especially now that there are so many alternative data sets we can choose from.
It's exponentially growing.
Yeah, it's exponentially growing. Yeah, you're right. Okay, and here is the question. So, I mean, as we have so many data and so many data sets, I mean, there are like hundreds and hundreds of data sets. How to orientate ourselves in those data? Which of those data are useful, which are not useful? And especially, I mean, as we are moving into the age of AI, which are the data sets that make sense for us as a quants to use, or we can use all of them, or I mean, or especially in the connection to AI, because right now with AI, we can use, I mean, anything.
So this is a really interesting question, and it's a very different answer today than it is 6 months ago or a year ago. Because and what a year ago, if we look at the amount of data that's on the internet and what was generated, who wrote it, where the source was, vast majority of it was human generated content, video, text, all of that stuff. I think very recently it flipped over to more than half the content that's available on the internet now has been machine generated and AI generated, and less of it is human generated. So there's two problems. One is, can that AI generated content be trustworthy? Is it trustworthy, right? Is it true? The hallucination problem is, we can dive into that for an hour just on that by itself. But how factual, how correct, how trustworthy is all that machine generated data? And then secondly, there's the second problem, model collapse. If you are using AI to ingest AI generated data, it only takes 2, 3, 4 times before the model collapses and you're just getting nonsense as an output. For me, the provenance of that data to ensure that it was legitimate human generated data is absolutely critical. Otherwise, that is no longer in your control. You can't control for some of those things if you're just randomly extracting whatever information you'd like from the internet.
Yeah, it's interesting, and it's also a big word. So for anybody who doesn't know, just can you explain data provenance a little bit, please.
Data provenance, yeah. So data provenance means, okay, so how can you track the creation of that data back to its original source? How do you know that it actually was created by the person that you think it was created? It's a very tricky subject. There's no benchmark standard for that because there's no fingerprints, there's no signatures, there's those kinds of things. It's just not there. So I think ChatGPT, just newest version of video generation, very difficult to tell if some of those videos are true or not. I think I've seen some watermarks, recently so that you can tell, but I don't even know if that's mandatory or not, but you can very easily edit that out. And then you could create something, that is intentionally nefarious or accidentally nefarious. Now, personally, if I'm going to use data to move for something that actually has material consequences, human life, obviously that's much more important than what we do. But if we're talking about managing money or moving money or making financial decisions, I want to know that the data I'm using is as true and good as possible. Data provenance for me is absolutely critical. I need to be able to source it all the way back through to the actual place it was created. And if I can't do that, then I'm not going to use it. Now, I would recommend that most people follow the same road, but I think it's tempting. It's out there. It looks good. Let me take a shortcut here and take a shortcut there. You're playing with fire because it only needs to blow up once for your entire system to implode. So I urge people to really think about that and proceed with caution in terms of the data sources you decide to use.
As I see it at the moment, and I had the discussion in the past with other managers. So, I mean, right now in the age of AI, so as the data analysis is cheaper and cheaper, and going in price to zero, what is really important are the data. So, I mean, they are like the new gold because, if the analysis is cheap, then where is the alpha? The alpha is in the data. So the better data we have in our model, the better the model is because, at the end, we are all using plus or minus the same models or stuff that's there. So, what can differentiate us from the others are the data. Okay, and here is the question about the AI. So, everybody's talking about the AI. Everybody's talking about how to use the AI. So, how to use the AI?
How do we use it?
Yeah, how do you use the AI to analyze the data?
Yeah, so we use AI in a couple of different ways. Maybe before we even jump down that road, it's important to even define what AI is, right? Because I think in public context, AI is now synonymous with LLMs, which is synonymous with ChatGPT, right? That's right. We're thinking generative AI, LLM, ChatGPT, Claude, Gemini, all of those generative tools, moving towards that artificial general intelligence, that super intelligence that Meta and all the other companies are attempting to build. I don't prescribe to that theory. I don't believe that is what AI is. I think that is a subset of AI. I think that's an application of AI, but you have other methods of deep learning that I can talk about that we use. You have other types of machine learning, you have other types of analytics, you have other types of automations. There are many other flavors of artificial intelligence besides the generative AI that everyone is consumed with at the time. I think, when you first experience it, it's very cool. It looks like, it's magical almost when you ask it a question and it produces something that's pretty coherent. You think you're talking to a human being, but, it's a marvelously engineered system that lulls someone into a false sense of security. But behind that, there are some serious problems. And that's why we don't use them for those problems. So, for example, the hallucination problem is real, but we don't.
Yes.
If, again, as I said earlier, if I can't trust it, then I'm not going to use it to move money. But it does some things that are really, really good and some things that are really, really powerful. And we do use it in some way. So in terms of how do we use LLMs, how do we use generative AI? We use it for document summarization. So one of the things that we found is that there's just so much fantastic work that's published, on SSRN and archive, and there's so much great academic work for a human to read that and comprehend that and summarize it and be able to store that information. That's more than I think anybody could do, and it would cost me a lot of money to hire a bunch of PhDs to just read academic papers. I enjoy reading them. My kids think I'm a nut because that's what I read most of the time now. But in order to stay on top of what is happening in the space, I personally think that's the best place to go. Go straight to what's being published in academic research, what's the latest and greatest, things that people are thinking about. So we partnered with the firm Zanista, and what they've done for us is they summarize a set of papers on topics that we're interested in that relate to our business. So every month they go out and find the best possible papers with the best possible research on our subject areas They have they have their own application of LLMs that they then use to extract, consolidate, summarize, and then give back to me summaries of all these papers. And so that way I can stay on top of that. Then I use Notebook LM to take their 300-page document and turn it into a 40-minute podcast that I can listen to in the car. And then it's easier for me to like identify, oh wait, that one paper, I do need to read that one paper. So of the 2,000 papers that were published that month, that gets me to the 1 or 2 or 3 that I really need to pay attention to see if that has any impact on the work done. So we use it for research. That's how we're using it. But we don't use any off-the-shelf generative AI technologies in our core trading systems. That's all proprietary. That's everything that we built in-house.
That's good. I get the point that AI is bigger than ChatGPT and LLMs, but I'm going to slow you down here for just a second and ask for another definition because I have a bug up my unmentionable area about this hallucination problem.
Yes.
It's a well understood problem. We all know what it is, but I think the engineers that kind of deduced this did the world a disservice by naming it that. So can you tell us what's really going on? Does AI really hallucinate? Or is there something else happening?
I think that it's one of those things where if it's not the word of the year or has not been named the word of the year, it should be the word of the year, right? Because everyone's talking about these hallucinations. And so I don't think it's a hallucination in terms of the models on LSD and it's hallucinated. It's a statistical anomaly in the fact that it has made essentially a spurious correlation. You've asked it a question, and because it's a probabilistic engine, in meaning that it is returning things that have high probability likelihood of information that you yourself want to see, that you will find helpful. But because it's based on correlations, and the tighter the correlation, the better the correlation, the more likely it thinks it is something that you'll want to see. That's what it has done. It is found things that are statistically correlated but are not actually related or have causal relation, and then has presented it back very authoritatively as fact. And that, I think, is that second part of it is really critical, is that it gives it to you, but it gives it to you in such a way that you're like, oh, it must be right. But it doesn't really know. It just presented it very confidently. And then we are so accustomed to thinking that, the machine is right, that we're hesitant to question it. For example, if you use your calculator and it says 2 + 2 is 4, it's always 2 + 2 is 4. Right, you can rely on the calculator it's never 2 + 2 is 6 or 2 + 2 is 4.5. It's not guessing that it's 4. It knows definitively. And I think we are accustomed to thinking that machines will return the same answer, every single time. The reality is you can ask ChatGPT the same question 6 times and it may give you 6 different answers because it's just trying to give you something that based on its engine that it thinks you will like. It is searching for that reinforced learning that says, I returned this set of text and you're going to give it a thumbs up. Great job, ChatGPT. That was really helpful. Now do this. It's looking for that pat on the head that says you liked it. So it will give you more of that, which then gets into the second problem that these models have. They're quite sycophantic. And I think the last version of ChatGPT came out with that problem as well. It said too much stuff that you wanted to hear. And that becomes very dangerous, right? Because it tells you what you want to hear, right? So let's play that out for just a moment. If we're using ChatGPT to analyze NVIDIA, like, okay, we're going to do some fundamental analysis on NVIDIA. ChatGPT, tell me what NVIDIA sales outlook looks like for the next 4 quarters. And ChatGPT goes out there and there's a ton of information on NVIDIA. So who knows where it pulled the information from? We turn on the deep learning, deep thinking mode. It comes back with some sources. So now we know it got some stuff from Yahoo Finance, from Wall Street Journal. It got some stuff from the Q's and K's, but we don't really know what its thought process was to make the recommendation it's about to make. But it tells you that, NVIDIA is going to go up 47% over the next 4 quarters. And you like that answer. So you say, that's great. Go find me more companies like NVIDIA that will go up 40-50% over the next quarter. It's not thinking critically, right? So now it's like, okay, now I know that Rado wants to see companies that will go up that way. Let me go find him some more. You find some more that you like, but you stop asking hard questions because you think, hey, this thing it's so smart. It's so fat. It must be.
It's amazing. Absolutely. Yeah, it's great.
It's great. Perfect. And then off you go. And now all of a sudden, you invested client money in NVIDIA and 6 other companies that ChatGPT said to invest in. Most of them don't go well. And then when you lost 80% of your client's cash, And the client says, well, why did you pick it? Are you really going to say, well, ChatGPT told me to? Like, how long will you have your job, if that is your answer? So that was something my dad used to always say. My dad would, like, even when I was little, he didn't really trust computers, but then this is back in like the 80s and 90s. I don't think it was that he didn't trust them. He didn't trust the reliance on it. He grew up in slide rules and he was an engineer. He always wanted me to make sure I understood this stuff. But if my brother or I ever told him, well, the computer told me to, he would never hit us, obviously, but it looked like he would. So that was just not an acceptable answer in our house.
Yeah. So what is the answer? So I understand that when we do not understand what the LLMs are doing,
Yep.
it's not very good idea to use LLMs for things that are important. And I absolutely agree with you. It's good to use LLMs for things that in which they are good at. So it means, I don't know, summarizing the text, etc., but not things that are really important. But if we have a lot of the data, so what we can do now? So to use some other tools that.
Yeah, I think so. I think one of the disservices that we've seen the last few years is all the oxygen in the air and all the resources that we've spent, trying to get these LLMs to work the way that we would like them to work, even though they, in my opinion, I don't think they ever will, right? I don't think they will get these hallucinations. Like some of these inherent problems are just inherent problems with the technology. So I think they're phenomenal. They will continue to do great things, but I don't think they're the end all be all. Again, my opinion is from Increase Alpha, my opinion that I propose within the National AI Association is that we need to start looking at all the other technologies that are out there. So for example, causal relationships, really, that's an area that has not yet been as fully invested, but offers significant upside. So once you figured out the correlation between two things, there are a lot of causal analysis and causal applications that are being created, like truly identify, is there an actual link between A and B that's resulting in C? Mathematically, you can prove that it's reliable over time. That allows for us to have transparency, in how these black box models work. It allows us to have explainability in terms of, why did you make decision C? Oh, it's because I knew A, B, C, all these other things, all these other factors, they played into it with this component. That's why I made this recommendation. That's why I thought it was good. You have to be able to go backwards, not just forward. And I think that's an interesting way of looking at generative AI. You create a question, right? It creates text, so it generates that, and then we sort of stop. What we need to be able to do is be able to go backwards from the answer and say, okay, how did you come up with that answer? That will allow, and that is what explainable AI is. There's a lot of upside because that has yet to be fully built out and developed.
So, I mean, if I translate that into the quant world, so yeah, we can use the AI or we can use all of different tools, but still comes back to one thing, and it's that we need to understand fundamentally what is the link between the prediction we are getting and the data we are having. So that's not some black box. So even that, I mean, it's AI, it can simplify our work, but we need to understand we have this and this recommendation. Our AI model is recommending this and this, but I mean, the reason for that is because these 4 or 5 or 6 different things are important for the company, and they are correct and they are right, and the company is doing well because of these 5 things, and it's not a black box.
Exactly. One thing that I wanted to bring up, and I've been thinking about this since we talked last time, like how can quants use LLMs to help in their day-to-day work? If they can't use it to, build models, they can't just embed it directly, like what's a good use for it? And I was thinking, one of the things that are great about quants is, we think mathematically, we can think very creatively, but it's very difficult to explain what we do to non-quants.
That's nice.
Like that's why I enjoy going to quant conferences, because I don't have to try to simplify things. I don't need to find analogies all the time, right? But I think it's very exhausting and frustrating. You lose a lot of the nuance in what we do when you have to, simplify things for non-technical folks. That's actually a great use for an LLM, is that like you've got a situation, you've got a strategy, you've got an idea, but then using an LLM to give it that, and then asking it to create an essay or a paragraph or an explanation to a non-technical person, that's a lot of load off of someone, and they probably don't want to do it anyway. So they'll put it off, but that way you can get it done very quickly, and most likely will be something that is usable and that the, whoever you're sending it to will probably understand. The big caveat to that is be really careful that you're not doing that like on a public llama. You put a proprietary model out in public space, and then all of a sudden if you lost your IP, like if you're going to do that, make sure it's a in-house piece of technology that's not going anywhere. But it is an interesting, from a time savings perspective, like it makes a lot of sense. I have a hard time being creative when it comes to like LinkedIn posts and headlines and that kind of thing. I'll give it, but that's a great use for it. I'll come up with an idea and then, hey, give me 10 different ways to explain this and post it out to my LinkedIn community. It'll come up with 10 things that are, usually fairly good. And you can tell it, don't be so aggressive, be a bit more conservative, and it'll iterate it that way. But, for folks who don't really think in that way, it can be a real time saver. And you can be very careful about not giving away information that you don't want to.
Yeah, because that information will be used against you.
Of course, exactly.
Just a quick tip. So I'm also using the ChatGPT in the way that you described. And also I like to use it for a creativity, like exercises. So give me 10 ideas for prediction XYZ. And I know that from those 10 ideas, like 9 of them would not be interesting, but 1 or 2 may be interesting. It doesn't mean that they are the best or the idea that the ChatGPT suggested is the good one. But I mean, what it means that it will get me interested in that particular answer, and I will start digging deeper and deeper and deeper. And when I do the research, I realize, yeah, that's something that I didn't know about, and maybe I can use this part or I can use those data, etc., etc. It's also useful for creative purposes. So
Yeah,
I mean,
I
to
think
do
so. Again, it does a good job of being your critical thinking partner, right? So, like, right, let's say you've got an idea and say, give me 5 reasons why this won't work.
Yeah.
Right. So, like, if you just start doing it, engaging with it in that way, I think it's really helpful. It's just really important to validate, right? The old trust but verify. If you, I remember when maybe it was probably, I think it was version 3.5 or 4, I need to write an essay about something. So I was like, oh, I can just ask ChatGPT to do it. So I said, here's the topic. And I gave a fairly complicated prompt and generated a phenomenal thing. And I said, hey, go find 5 sources that prove the point. And so thinking that it would do that, right? At first it told me it didn't have access to the internet before that time. I'm like, that's fine, just use what you have access to. It came back with 5 completely fabricated articles.
Yes.
Going right to your point earlier about hallucinations, each of those articles it was very interesting. They sounded real, right? It sounded like something the New York Times, the Wall Street Journal, or Financial Times or Washington Post would write. It was a headline that sounded legitimate. The headline itself was actually not based on complete fabrication. The thing actually did happen. The only problem was the article didn't exist. And so it reflected the theme of the Wall Street Journal, but none of the articles existed. I'm like, okay, this is dangerous territory. Like, it went to the point of creating the headline, giving me a link to it, and then when I clicked the link, it went to page 404. It wasn't even found. So
Yeah, this is exactly how I learned about the hallucination problem because similarly to you, I asked an LLM to find some articles for me to support a point, and it did, and it made up the headline, the author, the date, the URL, everything, and file not found. And I asked the LLM flat out, was that real? Yes. No, it isn't. Did you just make it up? Yes, I made it up. Okay, give me a real one. And it made up another one. And I asked it, did you make that one up? And it said yes. So that is how it goes. So we're stepping with this discussion towards the policy discussion I wanted to get to with you, Sid. But just before we do, I wanted to kind of tie a bow around the intersection of AI and data in your case as a quant, right? Because I know something about how you do this, and you're giving us a very interesting insight into the old aphorism 80% of a data scientist's job is janitorial. And I know I've said it on this podcast a zillion times, but you're really showing us what the janitor does, right? So way back in the beginning of the hour, you showed us how you're taking, to go all the way back to the beginning, you're taking the personally identifiable information out, right? Not looking at that. You're taking out some of the AI generated data because that's going to put a feedback loop in your AI model. You don't want that. You're using the data that I think you're saying is even more valuable than the quant algos themselves to build predictive algorithms and custom factors and those kinds of things in the strategies. But once you kind of got rid of that extraneous data, isn't it still true that for your machine learning models trying to predict stock prices, the more data, the better?
That's an interesting question. And I think it's sort of the fundamental question of how much data is enough data, right? Where do you draw that line, right? Is more data always better? I think that's not necessarily the case. I think there's a fine balance, sort of like efficient frontier in terms of optimal number of companies in a portfolio to, at some point when you start to degrade, you add data until you start seeing a degradation in your accuracy. And that was the method that we used, which was we kept adding to it, and we had gone through the correlation exercise to narrow down all the, the umpteen thousand features, ideas that we had to a set that actually, okay, now these actually have some correlation between them. Now do they have causation? All right, let's go through that exercise of adding the causation. Just because they have causation, does that mean that they help each other or do they contradict? Because you could have 6 pieces of data that all have a causal relationship, but because they're contradictory, some are contradictory, they all cancel each other out. So collectively, they add no value to it. And so that is a different mathematical exercise. What we do is we use, to borrow McKinsey approach, it's called MISI, which is mutually exclusive, collectively exhaustive. So we look at the problem from a business perspective and say, what data do we have that will support and and help us answer this question? And all the data has to be mutually exclusive, meaning they don't duplicate each other, but they're collectively exhaustive, meaning they cover all scenarios. And only the data that fits in that criteria is the one that we actually use. So we're not attempting to boil a pot of noodles and throw it at the wall, see which ones stick, and then run with that because we think all of it could be helpful, right? We have to selectively say this particular strand of noodle, and this particular noodle, and this, like, so there may only be, a handful in that dish, but they're the exact ones that will answer that question. To your point earlier, Rado, about like, being a cook, that's how we cook. There may not be much on that plate. You know what I mean?
Yeah.
Every single thing on that plate is intentionally chosen to support everything else. So it's sort of like going to a very minimalist French restaurant where there's only like 3 ingredients,
Yeah.
it becomes the most amazing meal you've ever had because those 3 ingredients were just curated and carefully chosen to to complement each other.
Yeah. And it's not 50 because then it's just a mess.
Exactly. Right. Exactly. Yeah.
I like this because this is probably one of the most important things that I heard in the last few weeks. Yeah, really, you are right. There can be in your model more data than you need. So by actually removing data, you can increase the quality of the model itself because it can be too much. Yeah.
And because it's impossible to really understand all the variables so you really have to test it over time. And so one of the things that we did is, which is very different than I think everybody else does, is we did a 4-year pure out of sample forward test. So we built our model, we set it in motion in 2021. And since 2021, all we've done is retrain the model and extracted the companies that are no longer listed or that we don't have public data for them, right? So we eliminated every single bias we could possibly think of. There's no look ahead bias because we didn't, we're doing it point in time. There's no survivorship bias because we picked the list as they existed at that time. So everything is point in time. And now we've got 4 years of data that we can really sift through to see what worked, what didn't work, and then understand patterns from that. From that basis, now we have the ability to completely apply it to almost any asset class in the world. This prediction engine that we have, this methodology that we have, can really be used not just on US equities, but derivatives, options, futures, FX, crypto, overseas, anything that has time-based data. Our core engine is simple enough that we could use it there. And then the question just becomes, how do we find those MISI data points to feed it and run with it?
Wow. Okay. So contrary to the trend that we're seeing of training LLMs and other kinds of models on the entire world of the internet, you're trying to ask what is the smallest data set possible that's going to give you the right answer?
Exactly. You're exactly right. So what is the least amount of data that we can use on the smallest engine possible to answer the most specific question? That is like our framework. And what that does, right? But there's more human brain power that goes into that upfront work of like doing that analysis and really, using our human judgment to figure out what those data points are and being intentional about the selection. And then I hate to use an analogy, but we have lots of models to choose from, right? I could use it in a diesel engine. I could use it in internal combustion engine. I could use that in a jet engine. I could use that in different types of engines. And what is the right model to use with that fuel? And then how do we get the best result? So that allows us to pair the data with the model to get that result. And one you may need to generate very, very quickly. So all that needs to be optimized. Maybe some other ones, you've got a bit more time, so you could be a bit more lagged. So that really gets to understanding the problem as well. So we're trying to apply all the tools that we have at our disposal to answer those questions. One thing that I know that's on everyone's mind is what are the costs, right? Because we all know these, the $1 trillion data centers that are being built and how much money is being thrown at it. We already published this in our papers. It's already public. Our annual AWS spend to run everything that we run is about $35,000 a year. That's all of it, including our compute, our daily inference, our retraining every year, storage, all of it is $35,000 a year. The model is small enough that it can be run on a cell phone, because we've optimized it, and we are completely free of needing any GPUs. So we don't have any NVIDIA reliance or anything like that. So our cost base is so small and our technology needs are so small. I hate to say we're immune from anything that's happening in the market, but we've intentionally designed it. We're not subject to market movements in power and consumption and energy and such.
Yeah, I mean, when I'm listening to you, I'm thinking about whether the NVIDIA is such a great company. I mean, if all of those data chips will not be used in the future.
Well, I mean, I think right now it's a phenomenal trade, right? So it just depends which direction, in your time horizon.
Yes, in which direction you will do it.
Right. It's going to make you money one way or the other. So,
yes.
Yeah.
So what I will take from this conversation is the last thing about the data set. There is definitely optimal number of the data sets that are used in a model. And as in a recipe, in a cooking, there can be too much of data in a model. It's an art, but for me, I mean, this is something that I will use a lot in my conversation in the future.
Thinking about it, just different kinds of the food analogy and the cooking analogy is such a great analogy. You know what I mean?
Mhm.
Because everyone has to eat. Right? So if you've ever had like perfectly cooked steak, it only has one ingredient. It may have a little bit of salt and pepper, right? But maybe that's it. Maybe that's literally all it needs. Or you could put it into a pot roast and make a great stew, but then you've got lots and lots and lots of ingredients, or you could do it something else. These are all different things. Now my mouth is watering because all I've had is coffee and I haven't eaten today.
You guys are making me so hungry. I didn't have breakfast this morning. I'm starving now. I think everyone listening is hungry at this point. It's not helping. Okay. Let's shift gears to film noir. You know what film noir is, Sid?
Yes.
Do you know, Rada, do you know film noir? Yeah. Okay. So, Sid, shifting gears, where were you on the night of Monday, September 15th, 2025?
So September 15th, 2025, that was my congressional testimony, I believe, was it not? Yes. I thought you were going to ask this past Monday, where was I when AWS went down? Because I could talk about that in conjunction to September 15th. If you're
Well,
going to.
The point is you've been educating the world, not just through the use of the technology, but directly speaking to the US government again, in a very specific role. So if you want to tell us about that and what was going on there and then wrap it into, Monday's AWS outage, that's great.
Sure. After I left the government and I joined the National Artificial Intelligence Association as their chief technical advisor. In that capacity, we work with legislatures, we work with other government officials to formulate AI policy that allows the technology to grow into what it can be without overly tight restriction. There's a right set of guardrails to place on the technology, but if you make it overly restricted, then the technology cannot grow into what it can be. So we're trying to work with the federal government to figure out where the right place to put those guardrails is. Really foster a culture of entrepreneurship, of innovation, of creativity in the space, because we really believe that this is the next evolution of technology. It has the potential to transform society, just like the Industrial Revolution. I've talked in that testimony that I gave at Congress. The analogy that I used then was like the railroads and steam engine. The funny analogy was until the steam engine had been developed, no human had ever moved faster than a horse. That was just the fastest anyone had ever done. So AI in its current form is now allowing people to realize like, oh, wow, what happens if you can move this fast? What is the art of the possible with this technology? But, the steam engine was not the last innovation there. There have been obviously multiple other methods of transport that it led to. And the steam engines led to, other types of train engines that moved faster and were safer and could do more things. And obviously that led to the car, led to the plane and all these other things. So I think we're at the very early stages of this revolution. And I think if we do this correctly, it'll really be good for humanity as a whole. However, and there's the big but, Monday, right? I was directly affected by the AWS outage, right? I was attempting to travel and screwed up my travel plans and, had to adjust accordingly. But when we think about AI and systemic risk to the financial markets, let's just say XYZ technology becomes the default standard for trading systems, right? And it's in one of these massive data centers that are being built, and then the power goes out, or there's an outage, or it's something as simple as what happened on Monday with a setting in a database. Then you've got systemic risk that affects the entire financial system and has serious consequences. So I think what's really key is to really understand redundancy and failover and backups and not having single points of failure, mission critical systems. And so I think it exposed, it was a grim reminder of how fragile our entire ecosystem actually is when something like that can go down. Now, keep in mind, I would even tell my own investors and my own clients, like, most of our stuff is on AWS East. What's the likelihood that AWS East goes down? AWS East goes down. How often has that ever occurred, right? So, of course, now AWS East went down. We internally are revisiting our own failovers and such. Fortunately, our business was not affected by it. However, it did make us look internally at our own contingency plans and our own business continuity plans.
Yeah. Okay. We're almost there. Rado, any last questions from your perspective on any of these topics?
I think we can speak for the next 2 hours about AI and data, etc.
No, we have to get Sid back.
Exactly. So
yeah, no, I'm happy to come back, because I think, again, it's nice to talk at this level. One of the things I would say, just around going back to data and maybe to close it off, that's been my approach. And one of the things, after 30 years of working with large companies, to your point, Dan, about 80% of data science being janitorial, it got very frustrating. It was difficult to have the level of excitement with another client. Like, oh, great, I get to spend 80% of my time fixing your mistakes and cleaning up your data. You can only do that so many times before you lose the enthusiasm for it. So when I had the opportunity to build my own firm, I knew from the very beginning that data was not going to be not just a problem, but it was going to be a strength of ours. It was going to be a foundational pillar of what we do. I was never going to be in a situation where our data was dirty and needed to be modified and cleansed and all of those things. It was going to be like a core foundation of what we do extremely well, and was going to be the reason we were successful going forward. What I find really interesting is that when you look at the largest companies in the world of, turn of the century, it's IBM and General Electric, right? Those are two biggest companies on the planet. Now they barely register. Now, these are two companies that had a massive amount of data about their product. They were leading technology companies. They had a massive amount of data about their customers. But because they weren't able to harness that correctly and monetize that effectively, they're not the leaders in their respective industries or in the US as a whole. When we look at the companies that are the most valuable, they're all data-centric companies. They use data as their fuel to exist. Meta, Google, Apple, all of these companies are completely centered on data. Now they have phenomenal product, they have phenomenal engineers, they have phenomenal tech. But if they didn't have the data that powered all that, would they be as valuable as they actually are? I would argue no. So we are definitely seeing that data does trump all, but this focus on data is really not taught in school. When you look at programs for data science or machine learning or PhDs and in computer science, maybe 1 or 2 classes on data quality, how to get data in the right way to power your models. It's all around the math of how to build these models, but very little is about how to get the data itself. They're often given a clean data set and then go off and build a model. That doesn't happen. I would love that to happen.
There's not a real world situation.
No, exactly. And I think, a lot of these folks are done a disservice, right? They get their PhD from a top school thinking that they're going to go off and do that. Just like I found out cruelly in my early 20s, you think you're going to go off and build all these cool models, but really what you can do is spend all this time cleaning up all the data. I thought I was going to go do financial analysis, and I just wound up, being a telemarketer. It's unfortunate. We're doing our best and brightest a disservice by not preparing them correctly for the world they actually will live in. And then again, I know we're probably over, but I think the underlying reason AI initiatives are failing across the landscape is because companies don't have a handle on their data, right? The data isn't ready to be used in the way it needs to be used for these products to really live up to their potential. So until, when companies fix it, maybe then they'll be ready, but I'm not holding my breath because, I've been holding my breath for 30 years. It still hasn't happened.
Okay, so we've given all kinds of love to the data scientists, telemarketers a little bit, but we want to give a parting gift to the quant managers. and quant analysts out there. Just one quick insight in the last minute remaining, the 10 prescriptive recommendations for a quant model that was published by a famous person. You had something to say about one of those bits. Which one was it?
Absolutely. So I think the linear versus nonlinear component of our work, right? And I think when we look at what core quant models are, we're attempting to use linear math to model a nonlinear world. The market is nonlinear. And so there's only so much that linear regression, which at its core is what quant models are, it's only going to be able to capture so much. And there is the question of, is there any more alpha to be found? One could argue, and I'm not saying this as fact, but one could argue that maybe all the alpha that linear models could have found has been found. In order to find additional alpha, in order to increase alpha as we have, you have to use nonlinear approaches. So that's one of the reasons why we actually don't use linear regression in our models. Our models are actually deep learning neural networks that attempt to really sort of model this nonlinear world the best we can with the data that we have. But I think we're still at the early stages of that as well. But what we found is it has massive potential because our particular product, even though we're using completely public data that's been out there for everyone else to use, by using nonlinear models, we've been able to extract pure uncorrelated unique alpha. And that has been, very attractive to our clients. And that's why we've gotten a lot of traction, a lot of attention recently since our launch, is because we've been able to find this unique and uncorrelated alpha.
Good. Okay. And you had to put the noodles and the food back in there again. So now I'm going to eat breakfast.
I may have some ramen or some pho or
that's right.
for lunch, So.
I'm salivating now.
Yeah,
okay.
Then the next time we will start the cooking podcast. So.
Cooking with Quants.
Cooking
on HGTV.
If Sheldon can do fun with flags, we can do cooking with Quants.
Yeah, cooking with Quants.
Okay, good. I think we need to go back to the studio at this point. So thanks, Rado. Thanks, Sid, for edutaining us today. That was great. So to meet Sid from Increase Alpha, to meet Rado from Quantpedia, to join us as a guest, or if you're interested to otherwise support the channel, contact me, Dan Hupsher, at these details here shown on the screen. And just note that any questions regarding investment offerings will be deferred to an email follow-up for compliance purposes, as these videos are not intended to be about investment offerings. But if you like this video, please do come back for our next interview with a quant manager guest. You might also want to watch the other videos on the Quantbeats channel, so don't forget to like, comment, and subscribe to Quantbeats on YouTube. Again, you can get there via the Q logo in the corner of your screen. Or finally, you can visit our websites and YouTube channels for more, shown here. So, Sid, Rado, everyone, thanks for joining. And as always,
thanks for the time.
Have a quant day.
Take care, guys.
Thanks, everybody.
Thanks much.
Bye.
Bye.